massive telltale signs that these big boys have pushed price around. And you can see that on the higher time frame. I've said this so many times, if folks would just focus on these time frames, it will answer 80% of the problems you're having, because you're too worried about what's going on in these lower time frames, because you're enamored by something maybe I've done with an intraday chart, 5 minute, 15 minutes, something like that, or even 1 minute charts you get on social media. Everybody's a wizard now. They're showing all kinds of things that they've either done or can do, and that's great. But 1 minute charts are not going to decipher what smart money's doing. That's just very short term volatility. Now, I'm not disparaging the ability to make money doing that, because I can do it just as well as the next guy can. But what I really want to focus my time on, and this is what I taught from 2010, as it relates just to Forex, but it really goes across all asset classes. If you use the higher time frames on any asset class that you're looking to speculate in or study, that is where the big money moves are. It's as simple as that. It doesn't get any plainer than that. Okay, so we're going to assume for a moment.
Now, that sound was from ICT himself. You could watch that video on his YouTube channel. That is from the ICT OTE primer video. It's one of the first OTE videos that he uploaded. It's about 5 years old. He pretty much says, and you heard it yourself, that you could do a lot with this higher time frame. This higher time frame is really where the money is at. You could do a lot on the lower time frames too. He said himself he can do it too, but this higher time frame is where all the institutions are trading. This is where all the smart money is, laying around. This is where you want to have your target of liquidity going towards and things like that. In this video, my recent video was daily bias. I'm going to make another video right now on daily bias. Now, daily bias is so very crucial because it gives you insight as to what you want to be hunting for the next day. And of course, I have that definition right here. This is the next draw on liquidity. You want to try to get a read on where price is more likely to draw to next. Is it going to draw higher to an old high or lower to an old low? And until it reaches that, you stay with that bias. This allows us to go in each day and anticipate either an up close or down close candle in alignment with that bias. Before I begin though, I want to say, what's up traders? I'm Hotshot. This channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. Please trade at your own risk. Now, real quick, if you're enjoying the video so far, please do me a favor and hit that like button for the YouTube algorithm. Helps the channel grow and reach more ICT students, which helps us get more feedback to fix potential mistakes, where I can then make better videos with a super solid approach for us all to learn together. Now, if you like free stuff, I love free stuff. I don't know about you, but we have a free Discord channel right here. I will leave the Discord link down below in the comments, also in the description. Go join it. We have Silver Bullet, the London Judas Swing. We got the 2022 AM model, the Indices 2022 AM model, Forex. We got OTE. We got Daily Bias, all that good stuff. We got a lot of people in here, introducing themselves, a lot of students working together and trying to form profitability, chasing consistency together. We have over 300 members in this Discord. Go check it out, go join, go conversate. And yeah, let's go ahead and jump into this video. I got the daily bias document pulled up right here. So first things first, to read daily bias, first identify the most previous run on liquidity. This is an obvious swing high or low. And anytime daily runs out sell side or buy side liquidity, price is likely to either retrace back into the range toward internal liquidity, which is like an internal swing high or low or fair value gap, or reverse, making a market structure shift with displacement and a fair value gap. Or it can consolidate, then continue expanding. So in this situation, we will go neutral if it's, consolidating. That's whenever we're going to go neutral. And then we also want to implement ICT's purge and revert whenever price runs out liquidity. If it runs out buy side or sell side liquidity, we want to implement ICT's purge and revert approach and wait for the market structure break to confirm our new bias. But from that point, what we want to recognize what phase daily price is in. Is it retracing, reversing, expanding, which ICT says is spooling, which is actually the best phase to go in and hunt for what's going to be explained in steps 2, 3, 4, and so on. If it's none of these three, it's deemed consolidation. And until we can recognize a different phase, our bias will be neutral. But this will allow us to know what kind of candles to anticipate. The current phase you are in is your bias, okay? So if we bring up Euro USD right now, okay, this is the current day's candle. It's April 26th, Wednesday. And so currently, if you notice here, price ran out some buy side liquidity, right? So at this time, we are neutral, okay? Now at this time, we would implement ICT's purge and revert approach. However, for this specific video, we're not going to implement ICT's purge and revert approach, okay? I have that on a separate document, and if you would like me to go more into ICT's purge and revert approach, let me know in the comments down below. I can definitely make a video on that too, but I don't want to make this video too complicated. I want to make it super simple so you can implement this bias strategy yourself, okay? Now, so someone mentioned they were like, by the time you even got that daily candle, you missed like 2 setups. Yeah, dude, they're all on the smaller time frame. I'm not trying to catch setups in this video. I'm not trying to catch setups in the last daily bias video. I'm trying to show you the direction so you can go down to those lower time frames and catch setups. Yeah, I mean, obviously we're missing setups by just going through daily bias, obviously, but you need a daily bias to assure yourself that you're trading in the correct direction. And of course, ICT says it himself. You also want to get over the concern about being right every time and put aside the idea of perfection, because you're not going to have it perfect. You're not going to get in perfectly, get out perfectly, not going to have the perfect risk, the perfect asset, etc. You will always find reasons to be wrong. You want to embrace imperfection, embrace the idea that you don't have to know everything. You don't have to be right. Being right is not equivalent to being profitable, and that's important, okay? Now, as we're looking at it here, once it runs out liquidity, this is where you want to go neutral, okay? You go neutral here, because now it's like it can either reverse, it could market structure shift right here and continue deeper down. It can continue expanding. We don't know that, of course, or it can begin consolidating, and then we can end up buying where it could wick us out and it could just be a big mess. So at this point, we're neutral. And then we want to go here. You want to mark out those obvious swing levels, not the little minor swings. And you want to mark out fair value gaps for price to target in its current phase. This is your draw on liquidity and your daily bias. So if price is bullish, the previous day was bullish, you want to skip Sunday's candle, of course, then the next day that we trade, we expect the previous day's high to be taken out, and the previous day's low to be supported. So with all of this, we're looking right here. That was a silver bullet model. Uh-oh, y'all just got a little glimpse at that. I'll make a silver bullet video as well for y'all too. A lot of y'all were asking when's the next silver bullet video. I'm actually going to back test some Forex. I know that it's, we say that it's ES specific, but I don't believe so. I don't think that's the case. And so we're going to back test in another separate video, but let's focus on daily bias here. Let's not get off track. Euro USD right here. So it just took out buy side liquidity. So at this point, we're neutral, right? This was our draw on liquidity first. It was drawing up to that, and you can see that it ran that. Where was it coming from? Well, if you notice, it ran out liquidity here recently. Ran out liquidity. It expanded the following day a little bit more, but then it began a retracement. Okay. Once it began this retracement, what did it retrace into? It retraced into this fair value gap right here. But not only that, if you were to draw a Fibonacci from low to high, you could see that it also retraced into the 618, which the optimal trade entry level is 0.7505. However, ICT does say that he enters in a little bit before price taps to 0.68618 just to assure himself due to like spreads and stuff that he's getting in the opportunity. And with this could be an optimal trade entry, but optimal trade entries are only specific to a certain time frame. And I'll make another video on the optimal trade entry so you know that time frame as well. But again, let's focus on daily bias here, okay? So price expanded, took out buy side, retraced into fair value gap, optimal trade entry. And then if you notice right here, let me clean up the chart. If you notice right here, there is this swing low right here with these 3 candles right here, right? Now, how is that a swing low, hotshot? Because ICT says that as long as you get like 3 candles where the middle candle is lower than this candle and this candle. So these candles are higher lows, right? Both of these candles are higher lows than this one. And this candle is lower than both of these ones. It's a lower low. This is a swing low point, right? This right here is a swing low point. So as soon as you get the swing low, once this candle closes, as soon as this candle closes and confirms that swing low, and we're in an area of interest, the area of interest being the retracement, we're at a fair value gap level, things like that. If you notice as well, there is also this order block right here. 2 candle order block right here on the daily time frame being respected, right? Being respected, and you can see all of this confluence coming together right here. This fair value gap, this order block, Fibonacci levels, all of this confluence coming together. Plus, we just ran out buy side. We're in a retracement. Of course, after a retracement, what comes from a retracement? It can either reverse, but it would have to take out this low down here. After a retracement is an expansion. Oftentimes, it can be a consolidation too. But after the consolidation, it breaks out. As you can see, it retraced, consolidated for a few days, and then it expanded. And what did it expand to? The next draw on liquidity. Okay. So again, once you get this candle right here, right? Once you get this candle here and it closes and it confirms that this is your swing low, this very next day, you go in and you anticipate a bullish long opportunity, okay? Now, right here, this is your target. You want to target the previous day's high. And of course, we ran that, right? Now, it did take out the previous day's low as well. Now, of course, we want to go back to the document so that way I can read you the rest of this so you can kind of understand exactly what goes into this specific situation so you know how to handle this situation, right? So if price is bullish, so from this point, once it closed, we deemed this bullish. Okay, once this candle closed, we deemed bullish. Okay, if price is bullish and the previous day was bullish, of course, you want to skip that Sunday's candle. Then the next day that we trade, we expect the previous day's high to be taken out and the previous day's low to be supported. In other words, there shouldn't be any movement below the previous day's low. Now, if price trades below the low, you want to wait for that day's candle to close. If it closes back above the low with the long doji wick or something that doesn't show any significance of going down, then hold the same bullish bias to trade toward the swing liquidity from step 2, which we marked out was right here. Now, if you look right here, that's exactly what happened. It took out the previous day's low, right? However, it closed with a very long wick. So now we're holding that same bullish bias. Okay, we're holding the same bullish bias, right? So if it closed below the previous day's low with a big bearish candle, then bias may be flipping. So you want to go neutral. And again, not every day is going to be an up close candle. So we will hunt intraday with that in mind. And if a short opportunity arises counter trend to this bias, we can dial back our risk or just not trade it. And it's actually best to learn to ignore these counter trend setups in the long term. You know, this step though actually lets us know what invalidates our bias and idea. So right now, our bias and idea of bullish is still holding due to the long doji wick. Now, if this candle would have closed down here along a big bearish candle, then bias could have been flipping. We could have possibly continued to see a little bit of more down move, but you can see that it closed way up here. So bias is considered to continue to be bullish, right? And we're going to hold that. Now, right here, very rarely do you see the previous day's high and low both traded through. If it does, it's usually indecisiveness or it's going to be a reversal soon, and it's just clearing the board on both sides of the marketplace. So when you see this, you want to prepare yourself for a potential reversal. So bias in this situation will be neutral. Our idea is invalidated unless it, closes with that big long wick. But if it's invalidated, we will then redetermine the phase and where price is now headed. So like in this case, again, it's pretty much clearing the board on both sides of the marketplace. So when you see this, prepare yourself for a potential reversal. Now, it was retracing and going bearish, right? It was going down. Took out both sides, clearing the board on both sides, taking out both sellers and buyers. And now it's starting to flip price up, right? And of course, this is hindsight, you guys. A lot of y'all are like somebody was talking trash, talking about, yeah, it's easy to see this in hindsight. And ICT says this too. That's how you learn. You got to learn from hindsight. You have to apply a strategy to hindsight. So that way you know exactly what's going to work, what rules to follow, and the specifics. You can't just look at price forming right then and there live and try to catch it and be like, oh, well, that's my setup. No, you have to see what made that setup work. You can't just, think that the setup works. You have to see what actually worked and disqualify the things that don't in order to tighten, critique, and make that strategy very, rules based and solid. You know what I mean? So that way, in the long term, if you take a loss, you won't second guess, like, so why did I take this loss? It doesn't make sense. It makes a lot of sense because you've back tested in hindsight and seen what works. It makes sense that you took a loss. It's just a losing day. It just didn't work today. So that's why you got to do it in hindsight. ICT makes this saying too. That's how doctors learn. Doctors learn from other doctors who've done it previously. That's how dentists learn. Dentists learn from seeing hindsight right then and there. What's what I mean? What's already happened and the success from it. You have to see these things. So I just wanted to get that out of the way, kind of get that off my chest. Now, again, right here, you can see that the market begins turning. It clears out the board on both sides. Now, of course, it closed above with this long doji wick, so we're still holding our same bullish bias. Now, if we're holding that bullish bias, we want to see, let me clean this up right here. We want to see now if this candle closed, and we're about to trade this day, we want to see this high get targeted and taken out, and we want to see this low get supported. We want to see it not get ran, and you can see that's exactly what happens. Price opens. This is the Judas swing. This is that manipulation move, and then this is where smart money accumulates longs. Expansion takes out the previous day's high. This was your draw on liquidity. Okay. After it expands, this is where, so manipulation, accumulation, and then it distributes out of the longs, and then it closes. Okay, that's how smart money works. They open, they give a fake manipulation move, they gather a bunch of positions, accumulate longs, they expand, target the previous day's liquidity, the draw on liquidity, the previous day's high if you're bullish. If you're bearish, of course, it's opposite, the previous day's low, but we're bullish. Target the previous day's high, and then they distribute out of positions, and then they close for the day. Smart money. Again, now this candle closes, right? This candle closes. We want to see the daily high because we're bullish, get targeted for liquidity, and we want to see the low get supported. We don't want to see it get ran through. Now, again, it opens. Here's the fake move, the accumulation of longs, the expansion to the next draw on liquidity, the previous day's high, and then distribute out of their long positions and then close for the day. Again, right here. you can see previous day's low, we want to see it get supported. Previous day's high, we want to see it get ran through and targeted. Now, again, here's the open. Judas swing, manipulation, fake move, accumulation of longs, expansion, targeting the previous day's high, draw on liquidity. After the expansion, they distribute out of their long positions and they close right here for the day, right? Look at that. We have 1, 2, 3, 4 days in a row where our bullish bias was solid, you guys. It was solid. It really was. Look at this again, though. Again, if we were to hold that same bullish bias, right? If we were to hold that same bullish bias, right? You can see that price opened. Here's a huge fake move, and it actually ran out our support right here, right? Did it close below it with a big bearish candle? No, but it did close near it with a big bearish candle. So in this case right here, you know, very rarely do you see the previous day's high and low both traded through. If it does, again, it's usually indecisiveness. So, or it's going to be a reversal soon, and it's clearing the board on both sides of the marketplace. So when you see this, you want to prepare yourself for a potential reversal. So bias in this situation now will be neutral. Our idea is invalidated. We will then redetermine the phase and where price is now headed, right? So right here, our bullish bias is invalidated, but we want to determine the phase and where, you know, price is potentially headed to now, right? We took out here, we're still in an expansion phase, right? Because this was your expansion, retracement, consolidation, expansion. Now it's in this expansion phase, so it's still bullish. Now you can continue to hunt bullish setups the next day. What is the next draw on liquidity? Well, the major draw on liquidity is this swing high over here. You can see it with this black line. Now, our minor draw on liquidity is going to be the previous day's high right here, right? And if we're still bullish, we want to see this low get supported. Now, again, you can dial back risk right here. If you're neutral, you can dial back risk and still hunt for a bullish setup intraday. Or you just don't have to trade it at all. But right now we're in this expansion phase. We're really close to running out this liquidity. Whenever we're really close like that, price oftentimes just loves to gravitate and run that liquidity. They're so close to running it, they're like, why not? Let's just do it. So in this situation, if you notice with this current day's candle, this is the current day right here. This is Wednesday, the current day, April 26th. Right here, you see that's exactly what happened. Price the previous day closed down here, right? But you can see it opened. It created a small little wick right there. You can see that it created this wick right here. That's the Judas swing, fake move, manipulation, where they accumulated longs. Boom, expansion. And what did they expand to? Target previous day's high as liquidity, as well as this major swing liquidity off the daily time frame. And you can see that it did that. As soon as it did that, it started distributing out of their long position, smart money specifically. So they opened, manipulated, Judas swing, fake move, accumulation of longs, expansion, targeted the previous day's high as well as the major daily high. After that, they distributed out of their long positions, and it's about 5 hours until this candle closes, but it's very likely that it'll close around here. They've already distributed out of their long positions because they've already targeted their previous day's liquidity and this liquidity as well. So now that it's ran out liquidity, now you can start looking at it like this. Once it creates a swing high, kind of like how it did here with this candle, and this candle. Once it creates a swing high, you can anticipate price to either retrace or reverse. It can actually also consolidate. But this is how you know what price is doing, right? Like again, even example right here, like price retraded down, right? What did it retrade down into? Well, it retraded down into a couple of a double candle bullish order block, right? You can see it ran out here. Now came back down into it, and what did it do? It created this swing low right here. Boom, boom, boom. Once it created that swing low, this fourth candle, you can anticipate a bullish move. So once it created this swing right here, you can anticipate a bearish move. But again, this is a retracement. Oftentimes, you really want to be hunting in a spooling market, just like how ICT says. The point to recognize what phase daily price is in. Is it retracing, reversing, expanding, which ICT says is spooling. And this is the best phase to go in and hunt for the next draw on liquidity, the previous day's high or low. So really recognize what phase you are in. Now, like right here, for example, if we see right here, there's this one, and this one, right? Between these three candles, this created a swing high right here. This next one, you can see that it opens, it manipulated up. This was your fake move, Judas swing, accumulated some shorts. And what did it do? It targeted that previous day's low right there, right? Targeted that. Here's the expansion on the next draw of liquidity. After that, it distributed out of the short positions and closed right here. Now, again, holding that same bearish bias right here to here. Of course, we want to see the previous day's high be respected. We want to see it, the previous day's low get ran as the next draw in the liquidity. So again, it opens here. Here's the Judas swing, manipulation, fake move, the accumulation of shorts. Here's the expansion on the next draw in liquidity, and then they distribute out of their short positions, close here. Again, if you're holding that same bearish bias, here's the next candle. The next candle open, Judas swing, fake move, manipulated up, accumulation of shorts, sold off. Next draw on liquidity was that previous day's low right there. Took it out, and you can see right here, it created that swing low. From there, it started targeting highs. You can see that the lows were supported. Dude, daily bias is so very simple. This is all you got to do to approach it. Okay. I don't want to make this video too long. I hope you got a lot of value from this video. If you want more daily bias videos in the future, let me know in the comments down below. But if you enjoyed this video, if you received some info from it, make sure you drop a like, please. Let me know in the comments down below. I appreciate all the comments. I really do. And until next time, also, if you aren't subscribed, please subscribe. I appreciate the subscriptions. I appreciate the support to the channel. Again, thank you guys for watching. Until next time, Hotshot out.